All right, ladies and gentlemen, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part for coming on in today. Let's go right into the chart, shall we? Bada bing, bada boom. So, this is how I put Bitcoin into this pitch fan here. What is a pitch fan? Well, you can go to your fib retracement tools, go down to pitch fan and favorite that. It's about 3 clicks, usually an impulse and a retrace idea. It can be to either direction. So back in basically January, I was trying to project where it was going to go, and I had this idea and saw this ascending channel, and it was quite fascinating how it's been maintaining this diagonal fib level. Okay, so this is the mean reversion idea down here at 19,000, and we were on the outskirts maintaining the 0.65, and the 706 region went up to the 786 and even the 886 for that rejection. And now we are back at the 618 of this diagonal fib level, and we have closed beneath it on a daily time frame yesterday. So this closing spinning top candle beneath the 618 could suggest that you come down to that 26K region on just this mathematical fib level. If we come back above the 618 and take out some of these liquidity pools at these local highs, then a rejection at the 618, which also happens to be some daily resistance level that we broke down at for a shoulder, head, and shoulder idea, is something I'm thinking now about for a short. But at this time, I'm not really looking to short the bottom. I'm contemplating a bounce to take out some of the buy-side liquidity. Now, what is the buy-side liquidity? Well, let's go into the high block capital heat map. What is the heat map? Well, it's when people lock their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss. So let's see who's not using a stop loss and looking to get repossessed by Mr. Market Maker, shall we? Okay. By the way, this is $70 a month, and generally we do this YouTube stream live every day. You can Google my name, Illuminated Nothing, in YouTube and find these updates in similar fashion we do every single day. So this is the 1 minute time frame. We are currently, it was previously 10 billion imbalance. We just forgot some to father time here. The minutes go into the future and we lose some of these bubbles that were located to the upside here, but it was 10 billion in short liquidity imbalance on this 1 minute time frame. So you have a pool up here at 29.37 for $228 million, and you have another stacked pool at 180, and so on and so forth. And you look at where these guys opened. For example, if we zoom into here, these guys opened their shorts as we were dropping into this candle. Some of them, like this guy at $245 million, opened as we were at the low here at 27.34. For a brief moment in time, they were in the green, and we are currently at break even for those guys. The thing I've been thinking about is this 28.32 region is getting quite thick. What do I mean by that? Well, if you look to the right here, where the black line is, that's our current price level. I often refer to these as ramen noodles because the length of the volume is displayed in this line here. And so the market maker is hungry to slurp up the noodles, and which side has more thick bands of noodles to slurp. And too much broth down here is not suggesting that it comes down into this, because it's just eating soup and they're not really interested in the soup, they're interested in the noodles. So where are the noodles stacked up the most? Currently it is stacked up to 28.327. we pointed out these ideas and they do come back to them. And the fact that they have these other pools of 107 million up here at 28.43 and 118 million at 28.32 and 115 million at 28.26, these are stacking up quite nicely for a bit of a short squeeze. And if we look at this current drop down to 27K, it did induce some bubbles more to the upside than the downside. They previously recovered this guy here at 218 million at 27.52, and we're currently going sideways to induce more. So in the interim, we did have some long liquidity enter here, 85 million to 41. So these guys could be targets, but overall, you had these guys open their shorts as we were dropping. They're currently in the negative. They're underwater. This guy in particular at 218 million at 28K even. So does this suggest that for the Tuesday, Wednesday, we see a bit of a push up to short squeeze some of these shorts that are in profit that are not paying themselves? That is kind of one of the narratives I'm looking at right now, at least conservatively, to 28.38, which would also coincide with a daily resistance level. We'll get to that in a minute. So you have to juxtapose internal versus external liquidity. This is internal, so you're just looking at this internal range for where these buy side and sell side liquidity pools are. So we're going to take a look at the higher time frame as you juxtapose and expand our vision to external liquidity pools. All right, I normally skip the 12-hour and go straight to the 7-day. So the 7-day also suggests, so we went previously and grabbed some of this. This is actually a higher time frame pool as well. So while we are imbalanced to short liquidity on the 7-day time frame, this is basically the heat map of this put into a heat signature, which is located in billions over here on the key to the left. So the yellow is 4 billion. So each one of these zones is $4 billion. And so we're clearly seeing on this time frame that the imbalance is to the shorts. But as you expand your vision to higher time frames, that's where you start to see the pools adjust and shift accordingly. So why did we come down to 27K? I was suggesting this on my live on YouTube last night, that coming down to this pool of 30 billion and knocking these guys out could be the option and creating a double bottom scenario, and then coming back in to take out some of these. However, you do have large pools down below. What do I mean by that? Well, you have 10 billion, almost double digits on this path to the downside from our current price. So to justify going up here, there has to be liquidity to grab. And while looking at it on this frame, you're seeing 8 billion and you're like, wow, that's a lot of money. By comparison, this is a lot more. So this is where you start to see the narrative shift to the potential of going to the downside and eating these pools, which are caked up nicely in double digits all the way down to 25K. So this immediate rise all the way up to these pools at 31 and above, which are double digits, doesn't necessarily justify that move just yet. You are getting 6 billion here and there on this 28.5 region. So these pools are percolating nicely, but you still have these large amount down below. Now last Sunday, not 2 days ago Sunday, but the week prior, we were talking about on our indicators seeing this pool on the 3-month time frame, basically back here. We were seeing this idea of coming down based off the liquidity happen quite nicely, because our pools were just getting popped to the upside, and the imbalance was clearly to the downside. So we started to retrace into these pools. Now these pools still have hundreds of billions of dollars down in these regions at 25.4, 22.6, and sub 19.4. So you have a lot of liquidity still located below for that retrace idea. Coming back into 25K is not necessarily out of the question as we expand our vision to the higher time frame. And as you see, the 22.5 has $83 billion down there, and you have 100 billion at 25 even, and each one of these levels has double digits, as you don't really have that same beckoning call to the upside here on these as we previously came back and chewed into it. So any kind of bounce we're looking at was what we were saying, like a shoulder, head, and a shoulder for a fuel to continue possibly down into these regions on these time frames. Now here's where it gets interesting. When you switch, oh, the yearly's not working now. Sometimes it glitches out, so we go to the 2-year. So here's where it gets interesting, because you have the higher time frame narrative of the yearly, and these pools at 34.8, 84 billion at 34.8. These pools to the upside are being paved in a narrative fashion to going to that region. However, knocking out some of these 100 billion pools down here would be wise to continue. You got over 100 billion at 22.4 and nearing 100, definitely over 150 if you can include the region between 25.6 and 24.4. This entire region is about $200 billion. And just in the similar price action above, you don't really have that much. You'd have to go all the way to 32K to see that same level. So the intention has been set to come possibly into these regions at 25K. Everyone talking about 25K is not necessarily wrong, but the interesting thing to note is these pools being paved to the upside. Okay, so back here in February, I was seeing this $162 billion left on the table at 25.6. And then we started to retrace into these regions on March 10th to come eat some of this liquidity, and then we had the Silicon Valley Bank crash. And I didn't know with the fury that it would bring to come to the upside in this fashion, but I did say they would come back for this 178 billion. So they leave stuff on the table to let the pool percolate, and then they come back with the fury to grab it and then some. So all these hundreds of billions got knocked off the table as everyone was bearish. So it's a game of traps through and through. And similar fashion back here in November, they induced the double bottom idea and they dumped it in every bull's face and took $500 billion off the table with the liquidation event of FTX. And they left some on the table as they came back towards the end of the year for those shorts up here at 22K and so on. So it's quite fascinating to study the liquidity because you get this kind of behind the curtains viewpoint of where all the liquidation points lie. And this is on the Binance exchange. Okay, so we're going to go back now to the monthly. Okay. So we previously got those two pools. I was concerned about those yesterday, even though we were coming up here. I was like, they could come back for this 30 billion easily, and then we'll see some divergence spawn off that if possible. So with that in mind, let's go into the charts and see what we see. So where would you want to see a rejection? This impulse retrace down to the downside here from the top to the bottom here gives you the 618 rejection possibility at 29,158 on this Coinbase chart, which also coincides with a multiple touch daily resistance level. Previous support becomes resistance as you come back to test it. So this could be the case if we come back to that region. We got rejected here. We haven't reclaimed it as support. So do we come back to retest? That is a possibility. However, you're seeing this suppression on the breaking of the 618. Okay, let's take ourselves out of the diagonal fibs and into the regular fib territory and see where we start to see something else. So we also started to put out a trend-based, bearish trend-based fib extension tool level, and it came to our target before it got there, back when we were seeing this impulse retrace idea. So we'll go to a lower time frame and show you how we did that. All right, so we'll just remove this, and you go to your fib tools, you add trend-based fib extension, and you start at the top impulse to the downside here, and then we attempted to fake out, retrace back up here, and that was as high as we could get. So beyond that 236 level at 30K, almost even, below that point, you are bearish on this fib math idea. So on the bearish trend-based fib extension level, it projects this math out into the future, and as soon as you break that 236 level, which we did with a fury on the hourly time frame, so you could have entered a short with that in mind and seen this break down with a fury down to the 706. The 706 is where the market makers give the permission to drop the trapdoor or not. So it did multiple touches over multiple hours, and they said, yeah, we got enough long liquidity to justify the move. Boom! And they dropped the trapdoor down to the 1. Sometimes it gets a little bit of a bounce on the 786, so you could scalp and look for re-entry, and it did at the 6.5, and you could have taken this down to the 1 level. Now, you can go back and pause this and copy my settings if you like. I extend the lines to the right for ad infinitum effect, and add these colors for these institutional levels in blue, and the take profit in green, and if you're lucky, the Hail Mary at 1618 and beyond. And it looks like we went to the 1618 and beyond, and we came back up to that 1382 level, not once but twice, and got rejected to the T on the close of that. So looking for a short at that rejection if you're still in that bearish modality, and we came down into this region. So these are higher time frame fibs. This is not related to this, but could we come down into the 2 level, the 26636? So this is where you start to see where these pools are and juxtapose them and see if some liquidity actually matches up. 26636. I mean, you got 26 billion at 26.8. So 26.8 would put you at that fib level down here. So do you wick down to this and get some more liquidity? You are getting a rounded top. Rounded tops are kind of bearish in terms of high resistance trade ideas. Similar to here, you had these rounded top ideas. Okay. So let's go ahead and throw on my indicators. What indicator do I use? Well, it was something thrown together by yours truly through a back testing idea. Go to momentummaster.info for more and scroll down to features. You can scroll all these indicators on at your leisure and read about the components within. We're not going to get into that so much, but we go over things like trend clouds and baselines and so on and so forth. I might get into a little bit of what they represent, but you can check it out yourself, momentummaster.info, for more. So let's go ahead and toggle those on, shall we? Boom, and boom, boom. Okay. All right. So we had the 6 time frames oversold idea here with the baseline crossover event, and we had a selling off thing, but we maintained the baseline, so that's kind of hidden bullish in my mind, and we saw ourselves to the upside here, and we were talking about that idea back on Saturday as it occurred, but we were seeing a fatigue and struggle, and we talked about the cloud thinning and shifting and a possible bounce off the cloud. We had a little bit of meandering around, but eventually got the bounce and the fatigue rejection of this fib level, and we've been kind of going sideways in a consolidation pattern. Now the trend cloud is kind of showing the volume flowing out right now. This is a volume weighted moving average formula. And pardon me, I'm getting a phone call. Sorry. Okay, so you got the cross up event, but you're getting a sell-off at the cloud. This is what happens when the cloud is not thin. When it is thick, you get rejected off of it. So when we broke through here, we said look for a kiss to the cloud, and we came with the fury to that. So you ideally want to see the cloud thin, and then you look for that long idea from that. What do I mean from that? Well, here is a perfect idea. So, whoopsie daisy. So you had this kind of reclaiming of the cloud. It was thinning. You had previously broken beneath it, but you came back above, and you saw that thinning just so perfect, and boom, you take it to the upside. So there's different things that come into prominence with this indicator as you go forward in time. So we're going to see what that is in this exact moment. So this stochastic array over here on Ultimate looks at 32 different values on different indicators and gives you that oversold and overbought status. Now if it closes that candle in that fashion, then it will leave that symbol there. So if I go to the hourly, it shows you 6 time frames were oversold in that idea. Now the elasticity, if we go to a 6-hour time frame, did that happen to close in that state here? No, it did not. It got bought up as this candle was closing, so it didn't appear there. So the amount in which the higher time frame that that symbol closes, the more it intends that an elasticity bounce will occur, similar to here. So I look for those higher time frame closes of those symbols that get alerted to your phone alongside these crossover events on the baseline. So the baseline is still holding on the 4-hour idea here. So we're kind of ambiguous at this point. Now the liquidity pool we suggested that would be grabbed up here would be at the 2832 region, with this $245 million character caked up quite nicely up here. So that coincides with the ATR region. It's a 3.3% move to the upside on this super trend idea, and it would be a stab at the cloud. So we were talking about yesterday on the live stream, like a kind of double bottom push up to there, and then what does it do from there? I have no idea. Maybe it just fades and goes back down into the liquidity here, but some sort of squeeze to take out some of these late shorters is generally what is calling for there, because you can't eat the liquidity while paying this side of the liquidity. You go up to go down, and you go down to go up. So it's kind of suggesting to me that that idea could occur despite going consolidation, because you have yet to break the baseline. What is the baseline? Well, you go to the baselines here, your first signs of reversal. This is one of the few leading moving average formulas you will find on the market. So these crossover events give you this in the moment, and so you would find the volume stepping in, and you'd be able to ride it up in a scalper's dream fashion. And this is what preempted the drop here. We had it on the 4-hour time frame here, and then we watched it cascade to the 6 here, and then we watched it cascade to the 8 and the 12 here and here. And then that Sunday we were talking about the 22-hour and the 12-hour. This got locked in, and we were saying, yeah, it's likely the short's going to come because the baselines are above the price. It can't close above it, so we're going to see this waterfall flow on down. So conversely, with the 12-hour, we're getting the baselines close together here. Can the baselines cross back up here? They are scooping the price in a nice manner similar to like an ice cream scoop. It comes beneath the candle and scoops it up before it takes it to the upside. Similar to here, how it kind of goes beneath the candles. Not exactly pristine on this candle exactly, but the fact that it closed above it was one of your signs. Where's that most? Yeah, here we go. So you had a bearish idea, possible double bottom here. People were bearish back in February. And then we saw this scoop underneath the 12-hour candle. You get the cross up event, and boom, it leads you to the upside. So this is what we look for over and over and again on our indicator. And you ICT guys that are elitists about clean charts, leading indicators do lead you to the promised land. That's why they are leading. So I don't discount any idea. I look at liquidity and ICT concepts, smart money concepts, and indicators. Whatever gives an edge is what I will take and use to profit. So don't close your mind to any possibilities. We have guys within the Momentum Master Discord which have been funded and are extracting hundreds of thousands of dollars a day. So it speaks for itself. It's up to you. I'm not going to sell you on the thing. If you're not interested, you're not interested. But this was, you can go back and check that date, and we had this for you before it occurred. And if this crosses up, it's most likely going to go up too. So you watch for that to close in that state, similar to here. So if that happens on the 12-hour time frame, we will be looking for that. Our stochastic is getting curved down here, potentially suppressed. However, on Momentum Master B, we like to have the money flow and the RSI overlaid. Why do we do that? Well, the money flow gravitates beneath the RSI. It generally insinuates that the money flow is going to come back to the RSI. We can go back in time and see that occur. Here, money flow beneath the RSI, boom, gravitates to the RSI. Oversold on the stochastic. Let's go back again. Money flow below the RSI, boom, gravitates back to the RSI, oversold stochastic. And the Williams is low as well. So we have the Williams in conjunction with that. The Williams is down here in this domain beneath. It's a negative value that looks at price probability. So when it gets green here, along with the money flow and the stochastic RSI, and the RSI getting in a low position, it's getting geared up for some sort of bounce in some fashion. And these are backtestably true. If you go back to here, you had that similar idea as it shot up. So you wait for the Williams to get to this green level, the oversold with the RSI and the money flow in a nice value, and boom. And you try to get this rising sun event on the Williams. So we're at an adaptive. Also here on the 12-hour time frame, we are at the adaptive moving average and the weighted moving average here. if we come back and kiss this and maintain it, the idea of possibly rounding out for upside play could be in order. We are reaching the Hail Mary zones of that bearish trend-based fib extension level. The 1618 has been hit multiple times now. All right, so one of my favorite time frames is the 22-hour. It's kind of like a unsyncopated rhythm, which I found to be backtestably true. Each candle is 22 hours and 2 hours, 22 hours and 2 hours. It's kind of like an 11/6 beat, kind of like a weird swing beat or something, to price action, which resets the probabilities on the indicators in a nice manner to where you see these pockets that play out. Okay, so this bearish divergence that was appearing here, and you got the cross down event, boom, it started to play out. So you're getting the money flow here too, beneath the RSI. You could see this pump up to the RSI. The Williams attempting to come up slightly here, getting some divergence by the looks of it. Depends on how these close. No, they're about the same angle. It's good. So, but yeah, this money flow beneath the price, looking to potentially go up at some stage. Now, if we go to the 6 hour, this is where it starts to show the competition between the time frames and the ambiguity of it all. So if we look at the 6 hour time frame, the 6 hour time frame is overbought here on the stochastic RSI. The money flow is coming up, yet you're going sideways. This is kind of a bearish idea when you have the money flowing up, or the probability of the stochastic going up, but you are going sideways. That shows no interest, which means that potential dump of the 6 hour could be a furious takedown event as well. So you have that 12 hour juxtaposed with the 6 hour, and the 6 hour could dump on you in a similar fashion here, where it dumped with a fury. So could you see the 6 hour come down here or not? This is also in conjunction with the 4 hour. 4 hour is thinning out and looking to double top, potentially speaking. You're getting a lot of ambiguity on these candles. You're getting a lot of volume stepping in on both sides. It's a lot of offloading, onloading, accumulation and distribution happening here beneath these lows. The money flow is above the RSI here on this time frame, so it's looking to come back to even Steven on that. So here's where you start to get the ambiguity. And on the hourly time frame, on the money flow, you were getting some bullish divergence twice on this grab here and on this grab here. So these liquidity grabs to these zones that we talked about here. Whoops, let's go to the monthly. So these liquidity grabs to these zones here spawned the bullish divergence. Bullish divergence and bearish divergence are spawned off of the dead carcasses of accounts. So when they came back down into these $30 billion and over here this $5 billion, it spawned some divergence, which they used to take it lower and induce more longs on the journey to that path. So the hourly time frame getting overbought and not really going anywhere. There's nobody stepping up to the plate for interest to the upside. And yeah, you're looking for these time frames to become in alignment similar to here. When these get in alignment and you reach a key level in conjunction with these oversold ideas, that's when you consider longing. As we are currently in this consolidation range, it's just what I call with my team an idiot box. So when you're in this idiot box, you could be range trading, of course, but there's no guarantees that it goes within that box again. So right now we're in an ambiguous place. This is Tuesday, Asian session. The Asian session generally pumps it before they fade. So we are currently, they pumped into the daily close and started to fade it here on the 15-minute. We saw the cloud starting to shift here on the 15, and we're starting to potentially kiss off of that cloud. Although the volume of Asia is very sparse, a lot of times Asia likes to pump it before they dump. And then they dumped into London, and London continued the dump, and New York kind of meandered back up to dump it with a fury. So they continued this idea and then just brought it back into the equal range. So they're just doing this liquidity grab. Here's a free indicator you can use if you don't have high block capital. It's called Liquidation Levels by ML Application. Go ahead and switch your threshold to 0.1, and it'll allow you to see every 100K trader out there on the Binance chart, but it works on multiple BTC charts. And this is essentially what is justifying the sideways action. They take out the 100x to take out the 100x and some 50x. Then they take out the 150x and take out some 100x and take out some 100x and take out some 100x and take out some 100x. And it's just this constant swatting of flies of the 100x traders. And so you can see which side is accumulating on what side more, similar to what we were doing on the 1 minute time frame. Now, I like high block better because it holds the memory of these guys back here better than this. This gets lost in the cache and can install a bias which is not actually there. So I use this sometimes once I already have a vision of this in mind and like to look at in the moment somebody opening up like $1 million trade here. Like this guy opened $1 million short at this level, 1.28 million at 27,545. So the bounce here is basically to go get him. Like, no, you're not getting paid, buddy. 1.28 million. There's no other 1 million here. So you're imbalanced on this immediate time frame to come back to here. So you just see where these imbalances lie. 1.5, 1.7. These shorts opened up in this region. And not so many in longs here necessarily speaking. I don't view it, this indicator, on anything above a 15-minute because the cache gets kind of full. So yeah, you're getting in this immediate moment, you're getting more longs open here. See, this is why the 15-minute didn't really display accurately to what the 5-minute is showing here. So you're seeing more longs open than shorts. So as they dropped it, longs saw that as an interesting point to bounce, and they induced their idea and came back with the fury to take them out. So they give this idea of support, but they're like, we're not supporting you, we're just inducing you, and then they come back for them. And this is what the rounded out price action is doing. It's creating long traps where these pools build up down here, and then they come back with a fury. They build it up, and then they come back and pierce it and pop these bubbles. And you just watch them do that to the other side too. Like they round out the bottoms and then they do the same thing. And so they take out the 100x to take out the 100x to take out the 100x to take out the 100x. And this is what range trading is about. And then it starts to step from that internal pool into external pools. And that's why you're like, why did it go down to 27K and bounce? Well, it released that pool of that time frame on the higher time frame we were looking at. So this is what gives you those leading ideas beyond smart money concepts, beyond, you know, some tutorial that you watched on YouTube. This will give you something that you can input subconscious data yourself and come to those conclusions on your own. So yeah, looking at this right here, right now, let's go to the 7-day one more time because we can see more liquidity here. So we're in this even path. Do we come back down into this higher time frame pool idea? The rounded out top suggests so. You're trying to get that hourly and 4-hour suppression here. Once again, it's the hourly, 4-hour, and 6-hour versus the 12-hour here. The 12-hour pushed back with a fury, as you see by this candle close. This rejection wick did get bought back up. So a lot can happen in 12 hours. You got 9 hours and 53 minutes for this to go down here and get bought back up, possibly speaking. You know, ideally you want to be shorting as these cross down events occur for those bigger plays. I don't generally take these kind of ambiguous zones for a short myself. While you could be getting in on this alert here and taking this down, it's not my cup of tea personally. All right, so we're going to probably do this in sections. This is my market update, and this is what I do every day for about 40 minutes or so on YouTube. If you're interested, just check it out in the search. If you're interested in Momentum Master, check out the link, momentummaster.info, for more. But we will stop the video here and do a part 2, which is like a Q&A if anyone is here. If not, then we will keep it short but sweet. But yeah, just looking at the 618 holding here, if you hold this level at the 27,370 region, which we have for the previous 6-hour candles, and this cross up event is suggesting something, maybe you could have this bounce up to the 200 weighted moving average and take out that short liquidity. The cloud is mighty thick, so you're not necessarily in the room for a super long play, but you would be looking for that rejection potential of the 618 here. So if you were to get up to 29K, if these are all if then statements, if you were to get up to here, then you would be looking for that rejection at the 618 region of this idea. Okay, so that's a golden pocket. It also coincides with the 706 of this bearish trend-based fib level, which is confluence as well. The 706, as we said just a moment ago, is the institutional rejection trapdoor point. So that could be the juicy short you're looking for if we get rejected there, if we go up to that level for that head, and shoulder idea. So what we're personally waiting for is for the alignment of the overbought or oversold status of the 6, 12, 4, 1 hour time frame. So this 12-hour time frame is oversold, so I don't like to mess with it when it's oversold, because it can do those furious buyback wicks like this as it traps some shorts. So there are short traders who are trapped here. Who are they and by what amounts? I don't get into that, but if you're into that, that is an exo chart strategy. Exo charts is another way to read the charts based off of trapped pools. All right, so we're going to stop there for recording 1 and get ready for Q&A.